Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, September 5th at about 1 p.m. Eastern. Well, the major indexes gapped up this morning at the open, and the S&P just for a minute, and the Dow actually made new highs, but then slipped lower when the August jobs report came out and reported that the U.S. economy added only 22,000 jobs on the month. That's below the 75,000 that economists polled by Dow Jones had expected. The unemployment rate also rose to 4.3%, still good, in line with expectations. On the good news side, traders are hoping the reading will lend support to the Fed's case to go ahead with an expected rate cut at its September policy meeting. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we'll look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $645.90. We'll just call it 646. Trading down a few points from its all-time closing high last week, just a couple of points higher at about 650. So just not just a few dollars lower here. And we see here how the SPY slowed its pace here in August, its pace, which is totally normal for what we have going on. Now the SPY is sitting right on top of the red line, the 20-day moving average, which is coming in now at 642, 643. You can't see it. Again, the SPY is sitting right on top of it. You can't see the actual numbers for the red line, the 20-day moving average, but it's right here at about 643. Still at a premium to its 50-day moving average, the green line, which is coming in at 633, and the 200-day moving average, the black line down here, that's coming in at 595 and change. Now, if we look left at the chart, we see that since the February back then, the all-time closing high back then in February, closed here at 613. So since that high, we know that the SPY rolled over, actually most everything rolled over, and dove down to this April 7th low down here at 482. Then it bounced, tried to get over its 20-day, but it couldn't do that. Then pulled back here to 508. Then rallied back up through its moving averages. By then, the moving averages were inverted, so it rallied pretty quickly back up through its 20-day moving average. The green line is 50-day moving average, up here to about 595. Then walked up from there, walked up its 20-day moving average back up again to where we are now at 646. And from April 7th low at 482, all the way up here, this has been a 34% gain. Now, if we sit back and sit back in our chairs a little bit, we can see that this is a really beautiful classic rally that we've been going through. In the first part of it here in May, the SPY was trading pretty dramatically at a premium to its 20-day moving average. Then as price continued higher, the 20-day caught up with it. It used it as almost like a trend line, used the 20-day as a trend line. And then we can see in June and July how price traded at a premium to its 20-day moving average above it, space above it. And then as we came into August, the price fell down to and started getting much closer to the 20-day moving average. And I always liken this kind of pattern here from these from the April lows up. I look at this kind of pattern, and with all my years in the market, I've seen it a few times. It's like walking up a staircase. It's like we walk up a staircase in the beginning, we've got energy, and our steps up the staircase are high above the actual stairs, and then we come down to the stairs and lift another leg up and down to the stair. But as we get closer and closer to the top of the staircase, Many times our legs get tired, and so our steps get more shallow, and that's actually what's happening here. We get buyers who bought back down here, or even a little bit higher. The buyers get tired, and at some point they put their hands in their pockets and say, "No, this is getting too overbought. It's been going on for too long. Valuations are getting overblown, and so we're not going to buy as much." And that's why we see what we are now. It's very common. It happens. And so we have to know this. So right now we say, well, what do we do with this? And we know that from what we're looking at here, we've got resistance up here at about 653 or so at these highs, 651, 653. We have some potential support at the 20-day moving average, right where price is. We can look down here at the 50-day moving average, and it comes in at 633. Then we can look at the pivot at 619. There's this little pivot here at 619. If that holds, who knows? We've got that pivot there. We've got the February highs from back here at 613 and the 200 right here. So that's going to come in here. Even the June highs come in pretty close. So we've got that. We've got the 200-day moving average coming in here at 595 and on down. So again, because September and October are usually choppy months, I will not be surprised here if we get some choppiness, even some, if price takes a breather here, I wouldn't be surprised. Of course, fingers crossed, price does stay above this 600, 595 zone right here. Hopefully doesn't pull back that far, but we do have all these numbers here, and it looks like it does have a good bit of support should there be a bit of a breather here. Let's go on to our next chart here. Our next chart again is a daily chart of the Invesco QQQ symbol. QQQ. Of course, this follows the NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market. Of course, those include the Magnificent Seven like Meta, Alphabet, Apple, Microsoft, that whole group. Now, when I captured this chart today, the Qs were trading at $574.12, riding a few points below the August high here at 583. And now just a few cents above its 20-day moving average, just like the SPY, which is coming in at 573 or so. And its 50-day moving average coming in at 564, and the 200-day, the black line down here, coming in at 519 and change. So if we look left on the chart here, like we did on the SPY chart, in February, the Qs made an all-time high in February at $539.52, so 539 here. Then, of course, price rolled over like it did with everything else and came down pretty dramatic here past March, down here to the April lows. April low here was 402. Then the Qs rallied, like the SPY, could not get above the 20-day moving average, hit his head on that, came back down here to 428, and then climbed again for the last 5 months all the way up to where we are now at about 574, back up here. So from the however, from this April 7th low here up to the high where we are now, or up to where we are now, it was a 42% run up, so that's darn good. So if we look at this chart, we see we do have resistance here at about 583, potential support at the 50-day moving average coming in at 564. We've got the February highs here and June highs back here. We use these. Once they make it, we use them because they work. We have that coming in at 539 to 537 here. We've got our 200-day again coming in at 519 and on down. So again, lots of price support and moving average support should we need it here, should the SPYs need it. Again, September, October are usually very choppy after an uptrend like this, which is absolutely fantastic. Nothing we can argue about with this. It's absolutely fantastic. After a run up like this, the odds are pretty good, especially in September and October, that we get a breather here, a pullback, and some profit taking. So don't be surprised if that happens. So right here again, we've got potential support, lots of potential support should the Qs need it. And of course, best case scenario is it stays above this 200-day moving average and just does what it needs to do, staying above that line, okay? Our last chart today is the Healthcare Select Sector Spider Fund, the XLV. It has 60 holdings. Top holdings include Eli Lilly, Johnson & Johnson, AbbVie, United Health, Abbott Labs, and Merck. Now, when I captured this chart today, the XLV down here was trading at $137.79. Quick look at the 20-day moving average here, coming in at 135.71. The 50-day moving average coming in here at 134.62, the green line. And overhead is the 200-day moving average, because price has been moving down here pretty dramatically ever since those March highs. Let's just look at those. Let's look left here on the chart. Not an all-time high, but the XLV made recent highs in March at about $150 here. Then it rolled over, and a lot of stocks had March highs and rolled over. So then it rolled over here down to 143 right here, then rallied back up. Look how it hit its head here on the 20-day and the 200-day moving average. Then gradually fell to, back here is the April 7th low right here at 129. Rallied a bit, came up, back up, and then came down here to a May low down here at 128. Then rallied at the end of April to 140. Rallied at the end of April, where am I here? Oh, I'm sorry, back up a little bit. So it did come up here, it rallied up to 140 in April, then down to the May low at 128, that's where it is, then rallied up to June to 138, right up here, and then traded in a range kind of from here to here, kind of mostly traded sideways, and then till August, and then back down to May lows. See how it retested that prior low in May? It retested it here in August, 128, and then rallied back up through the moving averages, the 20, the 50-day, and then started up here to where we are now, back here again to 137 and change. Healthcare, as you can well tell by looking at this chart, healthcare had a very quiet summer. While all of the tech stocks were in the spotlight, healthcare just did not get any attention. And then, so it had a very quiet summer. And then, as I said, down here in the August, when it hit the August low here of 128, retesting May lows, it started back up here. And in the last couple of weeks, it's starting to get some attention. Again, a lot of stocks in the tech industry are highly overbought, and so everybody's like, and I'm thinking, oh yeah, but healthcare is getting a lot of technology. It's going to be a lot of that involved in it. So I'm watching this. Technically speaking, I like this pattern, especially if it can break higher in the next week. So it looks like it's not walking on top of these highs here, but it's consolidating in an orderly fashion, and I'm looking at this as a very interesting pattern. So if in the coming week the XLV can stay above its moving averages, the 50-day and the 20-day here, I'm going to call it, make it easy, I'm going to call it 135. So in the next week, If the XLV can stay above 135 and the market is behaving reasonably well, I will buy a small position of the XLV in my trading portfolio, and I'm going to make it small because I don't know yet if it's going to do what I want it to, with a stop down here at 133.75 below the 50-day moving average. If and when the XLV closes above the 200-day moving average, and that's coming in at $139. So if and when the XLV closes above the 200-day moving average, that's the breakout I'm looking for. And of course, at that time, I will add to my position, and my stop will be a trailing stop. And you may want to wait. You may not even want to try to get in until it breaks above 139. That's totally your call. All in all, you may want to keep an eye on the XLV in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, Trade the Trend to Profits, right here, and this might even work with the XLV, you'll discover an easy step-by-step process that tells you how and when to enter, manage, and take maximum gains from long-term trades. Those are known as trend trades, position trades, or core trades. And with this strategy, you can earn really good profits without having to stay glued to your screens all day. Our new low price for this program is only $127. And by the way, some of my trainings here are priced at only $59. So when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, How to Swing Trade Successfully, another real popular program, How to Trade the Trend to Profits, How to Read Charts, great for novices or anybody who wants to brush up, 3 Winning Setups, great for short-term traders, and How to Bottom Fish Like a Pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or better still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.